Good day, everyone. I trust that you are all well, and so welcome to my YouTube channel. And today I shall be sharing with you the most valuable video I've ever posted ever since, right? It will be quite short but precise and complete at the same time, right? I shall be clearing up or making it quite transparent of the very important things that that gives you a very high probable analysis, right? That is coming up with your draw of liquidity and bias, right? So I'll be quite clear on those today as I give you the outlook of the final lap of the year, the outlook for December, right? The last month of the year before we venture into another trading year. So the occasion is is the festive season. So I thought I should make such a recording that is quite valuable, that is quite eye-opening for those who have eyes to see, right? So without wasting much of your time, let's dig in, right? So as you can see, I have two pairs right there, GBP USD and Euro USD. And I'll start by explaining why I have these two pairs on my chart, despite that these are the pairs that I call my pairs, right, that I trade. Actually, I started trading Euro USD, right? That is like my OG pair, right? Euro USD. But there's something called symmetrical discrepancy, right? Known as SMT in the ICT community, right? And it requires you that if you are trading a specific pair, then you also have to be aware, or you should also be trading the correlated pair, right? Because SMTs can happen and they truly affect the market. It doesn't matter whether you trade support and resistance or whatever, but SMT is real, right? It's quite real. So yeah, that's why I have two pairs right there. So I'll be analyzing GBP USD and Euro USD at the same time until we reach the intraday chart, right? The key in this video, it's not to spoon feed you a signal or something that you can take hold of for the short term, right? This video is mainly aimed to give you knowledge that you can cultivate yourself into a system that can help you long term, not short term. I've seen people DMing me say that send us signals, send us signals. I don't send signals, right? I provide information that can help you as a trader, right? Personally, I do not send signals. I feel like signals are just a scam, right? There's no such thing as signals. If rather, what I would do is manage investors' funds rather than provide signals, because some executions that I make are very fast to the extent that I might send a signal, but by the time you may see my message and you want to enter a trade, the manipulation would have already happened, and your execution would be messed up. So signals, I personally think it's a scam, right? I've never seen in my whole trading career someone who has leveraged from signals. Never ever. It's always a bad ending with signals. So I'm actually giving you an advice, right? A very good one. That is from experience, right? Not because I'm a guru, but I've seen it myself, right? Nice. So without delaying much, now let's dig into our analysis, right? The goal is to come up with a draw of liquidity and bias that I can later on utilize on the time frames lower, right, to build context, and later on to even time frames that are lower, build an execution, right? That's that is the main point here. So right now on the monthly, we should start with order flow, right? Always on a particular time frame that you consider to be a higher time frame that you'd want to be starting your analysis with, order flow is necessary in order to come up with a draw of liquidity, which are potential areas you're expecting price to be propelled to, right? That's what a draw of liquidity is. Then afterwards, you can use other concepts such as range dynamics, dealing ranges, right? A wise person would be writing these things down, because like I said, this video will be quite short but precise at the same time, right? So yeah, I will not repeat that. Dealing ranges, then candle ranges, key levels, right? You incorporate those to order flow in order to be much more precise with where you're expecting price to reach. So then let's dive into the charts. What is order flow? Order flow can either be bullish or bearish, right? There's no sideways order flow. Order flow can either be bullish or bearish. And what's important is to know the characteristics of bullish order flow and bearish order flow. If price is bullish, you expect the lows to be rejected and the highs to be broken, right? We have different types of highs and lows, right? We have swings, right? We have short-term swings, intermediate swings. We have CRT highs and CRT lows. These are all types of highs and lows. We have timed range highs and lows. We have typical range highs and lows. These all act as highs and lows. So when I say highs and lows, I do not say it subjectively like what those YouTube tutors do, right? They be just saying highs and lows, but they are not specific, they are not objective, right? But I think I've made my objectiveness. So then you're expecting lows to be rejected and highs to be broken in a bullish order flow, right? And you should expect the FVGs, the bullish FVGs, to be filled, right, and propelling price towards the sky, right? You expect the bullish FVGs to do that, and the bearish FVGs to simply be disrespected or disregarded, right? Price to not care whether there's a bearish FVG at all, right? That clearly shows bullish sentiment, right? And currently in the market, what do we see? We can see that the market as an overall, price has been rejecting lows, right? Price has been rejecting lows and breaking the highs, right, consistently. And you can see that even the bullish gaps, right, the bullish fair value gaps, let me show you, right, the bullish fair value gaps, price never really closed below the bullish fair value gaps. Price would use the bullish fair value gaps to create higher prices. So yes, price on the monthly is clearly bullish, right? And the reason why we are starting off from the monthly is because it's a new month, right? That's also key. It's a new month. It's not a new quarter. It's not a new year. It's just a new month. So reasonably, you should be starting off your analysis from the monthly time frame. So a wise person would be taking notes, because every word that I will be saying is on purpose and is useful, right? So then we had this current form of the market, right? This current market price, which was showing bearish sentiment, right? How was price doing this? It was rejecting the candle highs and breaking, right, breaking lower, right, below the candle lows, and seemed to be respecting this up close candle that got engulfed, creating lower prices even with an SMT right there at the top. But this was just current form, right, in price, was just a current bearish form in price. And I would call it short term because the higher time frame is more important than the lower time frame. If you look at my quarterly outlook that I posted in October with this FVG that we have on the 3 months time frame, and if you didn't know, or if you knew, you can consider price to be bullish or bearish in a current form only until price would have reached a higher time frame key level, right? Yeah, if you got that, wonderful, right? So then I would disregard price to be what? To be bearish and only anticipate bullish prices. And how will I get bullish prices, or how may I get bearish prices? Very two important questions that conclude your order flow. So if I'm expecting bullish prices, then I'm expecting price to respect the bullish fair value gaps, right? The bullish fair value gaps. I had one right there on GU, and that alone should propel the price upwards, and lows to be rejected, right, in order for higher prices to form. And you can see that we had that low rejected, and this would act as a CRT candle. Why? Because we are coming off from a what? From a 3 months key level, and high probability candle ranges form around or revolve around higher time frame key levels, right? They form around higher time frame key levels. So if you can get a appropriate candle range framework, then you can safely assume that you can now disregard any other concept, and all that you can put in your evaluation is that your draw of liquidity is the CRT high, right? And your bias is bullish towards it. So your bias automatically becomes bullish, and your draw of liquidity becomes the CRT high, right? And this is wonderful because we also have this symmetrical discrepancy, the SMT, which you must all be able to notice. This one. SMT right there. That's the SMT we had. Right. So that simplifies everything. Then so automatically your monthly bias is bullish, and your monthly draw of liquidity is the CRT high. If you want to add on some things, there's also something called seasonal tendencies. Go and look for the Euro USD and GBP USD seasonal tendency chart, or even the DXY seasonal tendency chart. You see that December is very bullish for those pairs, right? XXX USD pairs are very bullish in the month of December. Yeah, so go and check that out. So that also gives you conviction, right, along other things. But order flow, CRT was key in this scenario, in helping us evaluate our bias and draw off liquidity. But CRT did most of the work, right? Eventually it did all of the work. So yeah, then now we move on to the weekly time frame. So on the weekly time frame, the order flow on the weekly, how is it? Yeah, so on the weekly, we can see that we are coming off from a higher time frame key level, right? From the far left, right? Higher time frame key level, and you can see that we had right there on my left where those equal lows purged, right? That also acts as a key level, and so then I can disregard the order flow which was bearish all along until price reached the higher time frame key level. Now what I regard or consider is the structure off from the key level, right? So you can see that this up close candle that got engulfed, got disrespected, right, and couldn't sufficiently make price fall, and this candle was the new engulfed candle, right? Newly engulfed candle acting as an order block, right? So if I'm to expect bullish prices, then price should respect this order block, right, to create higher prices. Then if price would be bullish, that's fine. I should be aware of this order block on my left, right? But I still disregard it because we are coming off from a higher time frame key level. What you see on the lower time frames is nothing to affect on what's really going on, right? And what's really going on is what's going on the higher time frames. Take note of that, right? This video will be short but precise and straight to the point, right? And also another thing that suggests bullish prices is this dealing range, right? With this dealing range, and if price is bearish, you would usually expect price to reach at least the mean threshold of the dealing range before lower prices can be created. So that means this mean threshold of the dealing range acts as a draw of liquidity, right? And surprisingly, exactly at that point, this shows how fractal price is. It's also the candle range high of our weekly CRT, right? Yes, we also had the weekly CRT. So of course, based off time frame alignment, since we had a higher time frame key level right there, this can be an appropriate CRT to use, right? So hopefully, I hope you understand. I hope you do. This acts as a CRT candle, CRT low. So automatically our bias is towards the CRT high. We are bullish. Our draw of liquidity is also buy side, right? Same goes on euro, right? We also had this CRT candle in play, right? Right there. So our weekly bias is concluded, right? And draw of liquidity as well. And yeah, seasonal tendencies still remain bullish, right? And we also added some conviction with the dealing range, right? So yeah. It may seem simple, right? Yeah, at times it's simple. At times you need to incorporate quite a handful of concepts in order to make these evaluations, because not always will you have a candle range, right, that you can use at your disposal. So in this scenario, candle ranges made the work easier, right? Then we move on to the daily. Here on the daily, on the daily, the daily time frame is the most important time frame that you must always do your analysis correctly on, right? So first of all, the order flow has been quite bullish, because you can see that price was rejecting lows, right? Right here, you can see a low getting rejected, highs getting broken, right? Then momentarily price is choppy, but overall, as an overall, price has been quite bullish, right? And how would we possibly anticipate more bullish prices? You would want price to purge below a low, right? Candle low or swing low, right, before price can push higher, right? On the weekly time frame, we're at this order block, but there's a possibility to see price even go higher without reaching this order block, because there's no another order block on Euro USD which is the same as this one, right? If you look at Euro USD on the weekly, there isn't the same order block, right? Price actually filled all the price, right, in between, within the scope of that order block that is on GBP USD. So yeah, that alone makes it possible, right, for you to anticipate higher prices without price reaching it, right? Or price may reach it, right? Yeah. It's quite important to be aware of that. Then damn. Then here on Euro, you can see prices clearly been rejecting lows, filling everything and creating higher prices. And we also have a range framework, by the way. We have this range high, range high, and range low right here, which got purged, which was Terosubed plus TS. No. Yeah, just Terosub. Yes, which was Terosubed. So that means your draw of liquidity would be towards the 50%, which was already reached, and the opposite end. So that alone would tell you that that price is quite bullish, right? Then, in terms of daily bias, how would you bestly evaluate your daily bias? Um, of course, we are done with the monthly, right? This is now the daily. So, first of all, you should mark your weekly open and your weekly closing, right? If it's Monday, usually Monday is a day that you wait for to pass, right? Then after it has passed, you use it as a foundation to predict other days that are to come, right? And if you look closely, Monday is low right here on Euro USD, was not purged, but on GBP USD it was purged, which is an SMT, right? Which can potentially raise prices, right? So yeah, that automatically made my bias for today bullish, right? It was bullish, and I went down with that to the 4 hour, where you would look for context, right? Um, Context is when you're looking for an execution framework, and even I trying to identify if the conditions are conducive for an execution, right? Right. So then we had to move on to the 4 hour, and on the 4 hour, this is the candle range that I later on speculated from. So I would say on the 4 hour, you pretty much do the same, probe your order flow, but this is now the time frame that you're trying to establish an execution framework, right? It's not a time frame where you keep on trying to, build an analysis. You've already built an analysis by coming up with a daily draw of liquidity and your daily bias. When you move on to the 4 hour, you're trying to build context, right? You're trying to build a relationship with that daily bias. If that relationship can be met, then you see the executions coming easy, like easy, right? And yeah, this is the trade that I got into. And what was my key level? It was the rejection block. Yep, the rejection block. Entry, it was the 15 minutes. Right, yes, there was potential to get something more precise, but the 15 minutes gave a standard entry, right? And your target would be a 1:3 generally, right? You can see it was a 1:3, right? Yes, there's possibility to keep on holding, right? Since the draw of liquidity exists in the far buy side, and so that's how it's at. That is the outlook, guys. That is the outlook, and if you found this insightful, please like, share, subscribe, right, and turn your notifications on. And if you're interested in learning more, because there's quite a lot to learn, I don't want to lie to you, the rabbit hole goes deeper than you think. Those who cannot accommodate time to learning and even trading, but still want to benefit from trading, you may accompany me in something I call private fund management, right? Yeah, I know the masses call it account management, right? Yeah, that's what I also do, but yeah, it is some terms and conditions for security, and yeah, if you're interested, you just DM me, and we might arrange a call and discuss, right? But those are the two things that I just offer, right? It's either I'm teaching or I'm managing investors funds. That's what I do, right? I don't provide signals. I don't provide pre-recorded courses. My teachings are live, by the way, to those who would want to learn. So I'll leave the link in the description box for my group channel. You can join there, and I think you'll be able to contact me from the group. So anyways, cheers everyone. Have a wonderful festive season, and stay safe.